This is Nightly Business Report with Bill Griffith and Sue Herrera.
Hope springs eternal, but two new reports on the housing market are raising some concerns at a critical time of the year.
Historic settlement. The maker of OxyContin has agreed to pay a hefty fine after the state of Oklahoma accused it of helping fuel the opioid drug epidemic.
Tech transformation. McDonald's makes its biggest acquisition in 20 years, joining other fast food companies who are betting big on a digital future. Those stories and more tonight on Nightly Business Report for Tuesday, March 26th.
And we do bid you a good evening, everybody, and welcome. Stocks finished higher today despite those continued concerns about the slowing global economy. But as it happens, much of this day's news centered around the consumer. And we begin tonight with the Fed and the increasing possibility that the central bank could lower interest rates later this year. At least that's what the markets are signaling right now. And it could affect everything from your mortgage to your auto loan to the amount of interest that you receive on your savings account. Steve Leisman takes a look now at the rapidly changing outlook for monetary policy.
Up until a few days ago, the idea of the Federal Reserve cutting rates was a minority view, believed to be a remote possibility for next year. Now the market has shifted dramatically, pricing in a rate cut maybe as soon as September of 2019. The Fed funds futures market, which bets on what the Fed will do in the months ahead, is now pricing in about a 50% chance of a quarter-point rate cut in September, and those odds rise to 64% by December. What happened? First, the Fed last week signaled lower interest rates than the market had expected. Second, some key economic data from overseas, already weak, came in even weaker than expected. And then, in the past few days, two Fed officials suggested rate cuts could be a possibility. Speaking in Hong Kong, Chicago Fed President Charles Evans said on Monday, quote, "If activity softens more than expected, or if inflation and inflation expectations run too low, then policy may have to be left on hold or perhaps even loosened." A rate cut would be a sharp reversal for a Fed that just hiked in December, and that move is increasingly criticized.
They made a mistake of raising it, and then they made a terrible mistake in the statement that came out that sort of implied they were going to keep on raising it in 2019, which they walked back immediately when the markets collapsed. But the move itself was a mistake. If they had known the long bond was 240 in March, they would have never raised it.
Has the market gone too far? It's worth remembering. At its meeting last week, the Fed emphasized it had shifted policy into neutral, neither leaning towards a hike nor a cut. The market has taken that a step further, taking the minority view of a cut and making it the odds-on bet for now. For Nightly Business Report, I'm Steve Leisman.
Lower interest rates could mean lower mortgage rates, but there's more to the housing market than just that. Today, two important reports are raising some questions about the critical spring selling season. Diana Olick has the details.
Home builders pulled back in February, which was a surprise given the strong demand for housing and the big drop in mortgage interest rates. Single-family housing starts fell more than 10% annually, and building permits were down as well. The average rate on the 30-year fixed rose through much of last year, peaking at just over 5% last November, and that caused sales of both new and existing homes to drop dramatically. But rates began falling in December and have now plummeted to the lowest level in more than a year. That should have prompted builders to be more optimistic about pouring more foundations. Apparently not.
I think there's a lot of caution from builders coming out of the pretty abysmal Q4 that they had. And so people have been holding back on adding more inventory into the pipeline.
Single-family home construction is still climbing out of the crash that hit a full decade ago, and starts are still well below historical averages. Builders did put up more speculative homes or homes without buyer contracts on them recently and are now sitting on a 6-month supply.
I wouldn't say it's a great time. I would say it's a better time than a year ago. With the rise in speculative inventory that builders have seen over the past 3 or 4 months, yeah, they have had to start discounting on that.
Price gains have now been shrinking for 10 straight months in the existing home market, falling to just over 4% appreciation in January, according to S&P Case-Shiller. All of these are mixed signals for the housing market this spring, which will depend as much on housing affordability as it will on overall confidence in the economy, especially for the growing number of millennials who will make the decision whether or not to jump into ownership or stay on the sidelines. For Nightly Business Report, I'm Diana Olick in Washington.
So let's talk about what's wrong with the housing market right now. Joining us tonight is Neela Richardson, investment strategist at Edward Jones. Welcome back, Neela.
Thanks for having me.
I mean, Diana pretty much laid it out there. You get less inventory, which can mean higher prices, and that's an affordability problem for a lot of, especially those first-time buyers, right?
Right. So on the demand side, affordability is the key issue. And we're at a state demographically where we're seeing the largest generation in history for the United States, the millennials, move into peak home buying years. So the demand is there and it has a strong tailwind. The problem is we don't have the inventory to match the demand that is coming.
That's been a problem for some time now, especially for first-time home buyers. Do you see that dynamic changing at all?
It's going to change very slowly, and we've seen that. We've seen single-family housing struggle to get to prior historical norms, even though there is this demand. And the reason for that is that there are several headwinds on the supply side. We have still the difficulty of finding buildable lots. It's still hard to find labor, so labor shortages are a factor. Tariffs are a concern for building costs like lumber. And then there's regulation and zoning. So these are persistent themes, and they're not going to come and go with just one cycle or one decrease in rates.
So do you like the home builders here as investments?
You know, I am long-term bullish on real estate because basically, demographics are destiny, and we see the demographics very positive. And then there's all these short-term factors that will build momentum for housing. One, wages are the strongest they've been in the 10-year expansion, so that's good for housing. We've seen mortgage rates come down, as Diana alluded to. And so all of these things, we've seen prices coming down, helping with affordability. All of these things are additive for momentum and for builders to meet that demand, but it is going to be a game of inches because of these supply headwinds still.
Indeed. Very frustrating if you're trying to find a home to buy right now. Neela Richardson with Edward Jones. Again, thanks for joining us tonight.
Thank you.
And now to trade and reports that top Chinese officials have softened their tone on certain issues. It could signal that negotiators are getting closer to a deal, one that could get rid of some of the tariffs that have hit both business and consumers. But there's another trade matter that still needs to be resolved, and that is the new NAFTA. It has not yet been ratified by Congress. And now the White House is looking to build support on Capitol Hill and beyond. Kayla Tausche has the details.
Nearly 4 months since the U.S., Canada, and Mexico signed a new trade deal, the White House is now making its pitch to lawmakers to pass the agreement. Republicans meeting today at the White House to air their concerns, President Trump's top trade official meeting with Democrats to shore up their votes, and using hearings on other topics to sell the deal.
If USMCA doesn't pass, I've said this before, it would be a catastrophe across the country.
To avoid that outcome, the administration's enlisted outside help. Trade Works for America is led by GOP strategists, a multi-million-dollar marketing blitz with employee outreach, thousands of calls to lawmakers, and TV ads in vulnerable districts.
The USMCA is a trade agreement that will protect auto jobs and energize our economy.
Michigan is one of a handful of states where polling shows potential support for the deal in battleground districts that supported Trump in 2016 but elected Democrats last November. Phil Cox, who leads Trade Works for America, says they'll eventually target 50 districts.
Those are the areas that we're probably going to be targeting the most because we're obviously going to need Democratic votes to pass the House. We want to know how people in those districts view USMCA. Most of them don't really have an opinion. So we have a great opportunity to sort of define what this agreement is.
Cox's group found that 72% of voters in 4 sample swing districts supported the deal after hearing upbeat messages about it. The biggest jump among women and Democrats.
What folks respond to in the polling is not the technical aspects of the deal, but the fact that this is good for farmers, it's good for auto workers.
The sales pitch will kick into high gear in April when text of the deal and a report on its economic impact will be sent to lawmakers. Vice President Mike Pence will take the lead on the White House's public effort in hopes of passing the deal by August, when lawmakers leave Washington and the 2020 election season begins. For Nightly Business Report, I'm Kayla Tausche in Washington.
On Wall Street, stocks did finish the day higher thanks to a rise in energy shares and a stabilization of the yield of that 10-year Treasury. By the close, the industrial average was up 140 points. We're at 25,657. The Nasdaq added 53. The S&P gained 20.
Concerns of weaker global growth did not dampen demand for oil. Prices rose as traders focused on OPEC's supply cuts and forecasts lower U.S. inventories. Domestic crude settled just under $60 a barrel, and believe it or not, oil prices are up about 30% so far in 2019. And as you may have noticed, that is lifting the price that you pay at the gas pump. Here to talk more about oil and gas prices is Dan McTeague, Senior Petroleum Analyst at GasBuddy.com. Nice to have you here, Dan. Welcome back.
Good to be here, Sue.
You say this is kind of a push and pull situation between the fundamentals, like the supply and demand, and what traders are willing to do in the oil pits today.
Yeah, it looks like we have really two markets at play here. We've gone through 3 days where we've seen losses on the energy markets. Now we see a bit of a reversal. Really at play is concern about recession, Brexit, concern about the trade deal, which the previous piece had alluded to, between the United States and China. And of course, this sort of stuff we heard last week, kind of an odd sort of circumstance, the yield curve, basically meaning that, there are indications that a recession is in the offing. Whether that's true or not, I'll leave that to the economists. But all of these things have the pessimists really saying, hey, you know what, we don't want oil prices to go too high. On the other hand, we have those who are dealing with the supply and demand issue saying, wait a minute, we have a tightening of supply across the world.
Dan, Saudi Arabia would like to see $70 oil, at least on North Sea crude. Do you think they'll get it?
Yeah, they've come down from 80 down to 70. Wouldn't have to go very far on the Brent North Sea crude. If it's trading today at 67, 68, a couple more dollars, maybe we're finding a happy medium somewhere. But we know that crude's gone up, as you quite rightly pointed out, over 30% since the beginning of the year. Gasoline shot up, 42 cents a gallon since the beginning of January. So, those prices look a whole lot more like what we've seen, say, in the last couple of months, say up to October of 2018. We're back to the high prices, but this may very well sort of soften over the next several weeks.
Well, how much higher do you think gasoline prices specifically could go? $3, $3.25? What's your forecast?
We think $3 is achievable. It was attainable last year. We saw Memorial Day long weekend. It hit $2.99 as an average. And then, of course, slowly climbed down, didn't quite hit that point. But I think there is upside momentum, especially given the tightness in supply. We have a number of critical problems with some of the refineries across the country. Of course, we saw the evidence from Deer Park and the Houston Channel bringing vessels in and out that have been sort of disrupted. All of these are real factors, but strong demand for gasoline continues to be a big issue right across the country. And it's for that reason I think we can certainly see $3 before Memorial Day.
All right, on that note, Dan McTeague with GasBuddy.com, thanks so much for joining us.
Thanks for having me.
Time to take a look now at some of today's upgrades and downgrades. We begin with shares of NVIDIA. They were initiated with an overweight rating in new coverage at Piper Jaffray. The analyst there cited the potential for a significant margin expansion at the company. Price target now $200. That stock rose more than 1.5% today to $176.87. Allegiant Travel was upgraded to outperform from neutral at Macquarie. The analyst cited the strength in leisure fares lately. Price target $149. Shares were up more than 1% to $124.01. And Vertex Pharma was upgraded to outperform from market perform at William Blair. The analyst cited strength in the cystic fibrosis market following recent data from competitors. Price target now $222. That stock gained 3% to $189.91.
Still ahead, a settlement in the opioid crisis, but it's not over yet.
The acting head of the FAA will reportedly tell a Senate panel that Boeing's 737 MAX jets will return to service only when analysis indicates that it's appropriate. According to Reuters, Dan Elwell, who is scheduled to testify tomorrow, is expected to say that the agency's oversight approach must evolve, in his words, following those two fatal crashes since October. The FAA is expected to receive the final version of Boeing's software update later this week for evaluation. Separately, Lufthansa said today it has not lost trust in Boeing. The German airline plans to expand its fleet next year, but it has yet to decide if it will buy Boeing or Airbus jets.
Smaller health insurers that have exposure to Medicaid came under pressure today. This after the Department of Justice said that a Texas district court's decision that the Affordable Care Act is unconstitutional should be affirmed. Molina and Centene are the most exposed. WellCare has some exposure. And there are reports late tonight that Centene and WellCare are in takeover talks. That sent shares of WellCare higher in after-hours trading.
Congress went back to work in Washington today, and there are a number of policy issues that need to be worked out as usual. Ylan Mui is following that story for us tonight. And so now what's on the agenda now that the Mueller investigation is over here?
Well, there were really two big issues that dominated the discussion on Capitol Hill today. And the first one was health care, as you mentioned. Democrats came out with the new legislation today that they said will protect people with pre-existing conditions. They say will also lower the cost of premiums. But President Trump was on Capitol Hill meeting with Senate Republicans today, and he said that Republicans should be the party of health care. So that is one issue that we can expect to see a lot more focus on in the weeks and months ahead. Also today, the Senate took up a vote on the Green New Deal. That is the sweeping proposal to address climate change. It didn't advance in the Senate, but Democrats are determined to continue to talk about this, even though it didn't move forward. That is another area where they say Republicans are playing politics, and Republicans say that Democrats need to decide whether or not they are actually going to support this controversial proposal.
On the health care issue, is this a pivot for lawmakers, especially the Republicans?
Yeah, so what Democrats would say is that they've been focused on these kind of kitchen table issues all along. That's one of the reasons they say that they won during the midterm elections back in 2018. I think that Republicans right now are trying to regroup and try to press their advantage right now politically. The end of the Mueller investigation was a big win for them, and so they are willing to perhaps push forward with some bolder legislative and policy proposals that they may have shied away from previously.
Ylan Mui in Washington, as always, keeping our eye on things in Congress. Thanks for joining us tonight.
Thank you.
Carnival cuts its profit outlook, and that's where we begin tonight's market focus. The cruise ship company is blaming higher fuel prices and a stronger dollar for its soft outlook. But Carnival topped earnings and revenue estimates in the most recent quarter, and the CEO says the fundamentals are strong.
We see no weakness. We have capacity increase. Bookings have been strong. In fact, we have less volume to book now, same time as last year than we did last year, and that's with capacity increase. So we're ahead on bookings. We're doing very well.
Shares of Carnival, though, fell nearly 9% to 51.71. Activist investors are calling on Bed Bath & Beyond's CEO to step down, and they want the entire board replaced. The two investor groups own a combined 5% stake in the company. They are also pushing for a review of options, including a sale of all of Bed Bath & Beyond's non-core brands. The shares rose 22% to $16.92.
McCormick reported better than expected earnings, but sales came up short thanks to weakness in its consumer business. The CEO of the spice and seasoning maker said that the company continues to execute successfully on its strategies. McCormick was up 1% today to $145.36. KB Home reported better than expected earnings after the close of trade, but the home builder's revenue was shy of estimates. Nevertheless, the CEO says he anticipates strong demand during the spring selling season. Shares initially rose following the news, adding to a fractional gain during the regular session today, where they closed at $24.08.
The maker of prescription painkiller OxyContin settled a closely watched lawsuit with the state of Oklahoma for about $270 million. Purdue Pharma has been accused of playing a role in the nation's deadly opioid crisis. And as Aditi Roy reports, this settlement will not be the last.
A settlement announced today aimed at the heart of the nation's opioid crisis. The agreement resulting from a suit against OxyContin maker Purdue Pharma by Oklahoma Attorney General Mike Hunter. The majority of the money will go towards a national addiction center at Oklahoma State University.
It is going to save countless lives, and it's going to keep families together. And it's going to be the tip of the spear in terms of leading the nation out of the addiction epidemic that has claimed just this past year 70,000 lives.
Oklahoma's suit claimed Purdue and other drug makers powered the opioid crisis through aggressive marketing tactics, which downplayed the harms of the opioids. The deal avoids what would have reportedly been the first trial for Purdue over the drug crisis. So 2 members of the Sackler family, which founded the company, will not have to testify in court. In a statement, members of the Sackler family said, while the agreement announced today is not a financial model for future settlement discussions, the establishment of a national center is a unique and important step that we hope will save lives. But today's deal could be just the beginning for Purdue. The company reportedly faces up to 1,600 opioid lawsuits from states, cities, and counties over prescription painkillers. And Oklahoma is reportedly one of 37 states to sue Purdue since 2017. Earlier this month, Purdue's CEO said the company is looking at a possible bankruptcy as a result of these claims. The company has denied wrongdoing, saying labels for its painkiller carried warnings about the risk of abuse and misuse. From 1999 to 2017, nearly 218,000 people have died in the U.S. from overdoses related to prescription opioids, according to the Centers for Disease Control and Prevention. OxyContin came on the market in 1996. But some argue that pharmaceutical companies are not the only ones to blame for the crisis.
I think as a society lately, we're always looking for bad guys. It's rarely that simple. But there are a lot of people, the FDA and physicians and drug developers and insurance companies, that can really play a role here in making things better.
Today's settlement only involves Purdue, leaving claims pending against Johnson & Johnson and Israel-based Teva Pharmaceuticals. For Nightly Business Report, I'm Aditi Roy, San Francisco.
And coming up, how artificial intelligence will change the way you order fast food.
Former Nissan chief Carlos Ghosn reportedly received an unusual perk from the automaker. According to Bloomberg, Nissan paid the college tuition of all 4 of his children who attended Stanford University. The total cost, about $600,000. Nissan did not respond to a request for comment. Uber is buying Middle East rival Careem for a little more than $3 billion. This acquisition is Uber's largest ever. It will help the ride-hailing company push further into that region that has about 400 million people. And the deal also ends a rather costly battle between those 2 companies over market share. Lyft is expected to price its shares above the targeted range when it goes public. That range was between $62 and $68 a share. According to the Wall Street Journal, there's strong investor demand ahead of the initial public offering, but the price is unlikely to be as high as $80. Shares are expected to price late Thursday. And for those consumers who enjoy fast food, the entire industry is undergoing a technological transformation. And today, McDonald's made its biggest acquisition in 20 years, buying artificial intelligence startup Dynamic Yield. The stock rose nearly 1% on that news. And tonight, Kate Rogers takes us into the company's digital future.
McDonald's spending some $300 million on the startup, according to people familiar with the deal. Dynamic Yield uses technology to help personalize the customer experience. McDonald's will deploy this first in its drive-thrus on digital menu boards, which will show food based on the time of day, weather, current traffic in stores, and even trending menu items. It'll also enable McDonald's to display additional items that customers might like based on what they've just ordered. The plan is to roll this out at U.S. restaurants this year, then into top top international markets. This as the company continues to modernize and update restaurants around the globe. McDonald's isn't alone with its focus on technology as consumer preferences change, relying more on convenience and speed. Chipotle is focusing on digital, seeing its digital sales skyrocket about 65% in the fourth quarter. The company is currently testing out Chipotle lanes focused on digital order pickups in addition to pickup shelves in stores. Dunkin' Donuts rolled out a drive-through solely for mobile orders at its next-generation concept store in 2018, part of its $100 million blueprint for growth to update locations and offerings through 2020. And just last week, Starbucks announced it would focus on investing in and potentially partnering with food and retail startup technology companies through a new fund. As customers demand quick access, customization, and easy ordering more now than ever before, restaurants are banking on technology to get them into stores, at drive-thrus, or even ordering from the comfort of home. For Nightly Business Report, I'm Kate Rogers.
And before we go, here's a final look at the day on Wall Street. The Dow was up 140 points to 25,657. The Nasdaq added 53. The S&P 500 gained 20. And the price of domestic crude settled just under $60 a barrel today. Believe it or not, oil prices are up about 30% so far in 2019. And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll definitely see you tomorrow.